Hello, welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of GBP USD pound US dollar. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis, and do not forget to check out the Forex analysis playlist on my channel for the analysis of other pairs like Euro USD, USD JPY and many more. So let's get started. So this is the 4-hour chart of GBP USD in front of us right now, and if you have watched my yesterday's video, then you can easily recognize these two lines. But if we just look at the present portion of the chart here, then one thing is very much clear to us that yes, market is in downtrend, market is going down, but there is not much heavy selling pressure in the chart of GBP USD. And if we look at the overall trend of the market here, then we can easily see that market is in downtrend. There is no doubt about it. Okay, downtrend means the number of sellers are higher in comparison to number of buyers. And if we just focus on the present chart or this particular portion of this chart, then again we can see that yes, sellers are dominating, or the sellers have the influence in this market right now. Therefore, following the basic rule, the thumb rule of the market, which says follow the trend. So following the trend means if a market is an uptrend, we should mainly look for buying opportunities, and if a market is a downtrend, we should mainly look for selling or shorting opportunities. So one thing is clear to us, that GBP USD is a downtrend. Therefore, it will be wise if we only look for shorting opportunities. Clear? So we have understood the trend of the market. So the next important point is area of value. I have discussed about area of value in hundreds and hundreds of my videos. Area of value is nothing but the best trading opportunity or the best trading spot. In an uptrend market, if a market is in uptrend, market is going up, then the best buying opportunity is always near the support. Whereas in a downtrend market, or if a market is in downtrend, then the best shorting opportunity or best selling opportunity is always near the resistance. And GBPUSD is in downtrend, we know it pretty well. Therefore, we need to find the resistance. And you can see that I have drawn a line here, drawn this trend line. And as you can see that this trend line is acting as a dynamic resistance for the market, which means that whenever market was trying to go up, it faced resistance from above. See, market failed to go up every time. So this trend line is a valid resistance for the market. If you do not have this trend line drawn on your charting platform, then my dear friend, I'll request you to draw this trend line, because this trend line is extremely important. So this is the resistance for the market. So following the rules, the basic rule which says that in a downtrend market we should sell, and we should mainly look for shorting opportunities in the resistance, and we have found our resistance. Therefore, the first trading opportunity is short-term market at the resistance here. If market goes up from here, okay, let's assume market goes up from here, then you can short the market at this resistance. Just observe the price. Once it hits the resistance, just observe the price, just see how the price reacts, how the price is doing. If you see that price is unable to cross the resistance, price is struggling near the trend line, then you'll get the confirmation that yes, the trend line is still valid and you can short the market here. That is your first trading opportunity. The second trading opportunity is, as you can see that I have drawn another line here, 1.3775. This level is also very much important for the market, okay, because this level belongs to the weekly chart. See, this is the weekly chart of GBP USD, and as we all know, higher time frames like daily time frame, weekly time frame belong to the big players, the institutional traders. And as we all know, traders like you, traders like me, retail traders, we do not decide the direction of the market. It's them who decide the direction of the market. And as you can see that previously, when market faced selling pressure from above, market went down. This was the level that acted as a strong support for the market. Previously also in the month of May and June, when market was facing some selling pressure from above, This was the level that provided the required support to the market. Therefore, one thing is clear to us that 1.3775 is a valid support for the market. Therefore, your second trading opportunity is buy at 1.3775. So you should also mark this level on your trading platform. See, generally I do not recommend a buy in a downtrend market, but this level belongs to the weekly chart, the time frame of the big players. Therefore, there is a good possibility that market will be bouncing from this here. If you see that price is bouncing from here, then easily you can go for a buy here, and this is your second trading opportunity. Clear? And I'll say that you should not trade in the middle, because as I always say, do not chase the market, let the price come to you. So right now market is trading in the middle, so please do not trade here. This is your no trading zone. No need to trade in the middle. Just wait for the market either to come down and hit this support level, or if market goes up from here, then you just short the market at the resistance. That's it. And if you go to the Forex sentiment meter here, you'll find the Forex sentiment meter on my website, vilashhazarika.com, under Forex 101 section. So if you go to the Forex sentiment meter, you can see that 50% retail traders have taken short position and 49% retail traders have taken long position, which clearly signifies that even retail traders are confused. Retail traders are also in dilemma whether market will be going up or down. They are also not sure in which direction market will be moving. Therefore, we are seeing a 50-50 ratio in the Forex sentiment meter. Okay. And if we go to the dollar index chart here, you can see that dollar is extremely bullish. Okay, dollar is extremely bullish. And as we all know, if dollar is strong, dollar is going up, then there is a selling on euro and GBP. And if dollar is going down, then there is a buying on euro and GBP. Right now you can see that dollar was extremely bullish, and this was the main reason why there was selling on gold, selling on euro USD chart, selling on GBP USD. But right now the good news is that you can see that dollar is just standing at a resistance. So if dollar reverses from here, then you will see some good buying on the euro USD and GBP USD as well. So let's see where the market moves. And just most importantly, just keep in mind that you should not trade in the middle. If this is your no trading zone, you will only initiate a buy if market bounces from this level, 1.3775. And if market goes up from here, then you will initiate a short call at this trend line when market will be reversing from here. That's it. So this is it. Hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See you tomorrow.